What's up, everybody? I'm Andre. I'm the founder of AraxisHQ.com, and in this video, we're going to go over market structure shift and structure continuation. Let's get into it. Alrighty, so before this class begins, a few things that you need to know. There are two ways to identify market structure. One being a market structure shift, and the market can continue, which is continuation. When the market structure changes its mind and when it doesn't. That is what you will learn here today. Class 1 gave you swing highs and swing lows, and this class will teach you what it means when one breaks. Either the market structure is shifting direction, where you get a market structure shift, this is the abbreviation, or confirming it, where you get a structure continuation, this is the abbreviation. Reading which one is happening is reading the market. So this gets into actually understanding what the market is doing. Now, the first thing we're going to go over today is a bullish market structure shift. This isn't anything complicated, but a true bullish market structure shift manipulates old lows first and then quickly delivers higher prices. There are three requirements. Miss one and it's not a market structure shift. First, you have to have liquidity taken. So here is our liquidity. Liquidity has been taken. Two, you have to have displacement. So once that liquidity is taken, you need displacement away from that level. As you can see here, this is displacement away from this level. And three, a close through a swing point. So here in class 1, we learned about swing highs and swing lows. Here we have a swing high and we need a candle closure through that swing point, not a candle wick, but that candle body has to close above this swing point for it to be a true bullish market structure shift. And a bearish market structure shift is the exact same thing, just the opposite. Old highs get manipulated, buy stops get collected, and then price quickly delivers lower. The continuation just failed, and this shows that the direction has changed. So here, looking at this diagram, as you can see, we have our liquidity that was taken here, liquidity taken, displacement away, and what do we need? A closure through that swing point, and that candle closure has to be with the candle body. The wick can wick all the way down here, but if the candle body does not close through that swing point, it is not a true market structure shift. Alrighty, so that is how you identify a reversal in the market. This is going to help you identify a continuation in the market. Here you have a bullish structure continuation. A lot of traders call this a break of structure or a change of character or whatever they want to name it, but none of those really make sense. The structure is continuing, and that's why I call it a structure continuation. Not every break is a reversal. When structure keeps breaking higher, the market is confirming its intent to keep delivering up. So here we have a high, a low, a higher low, and a higher high. So this shows that the structure is continuing. As you can see here, we have a old swing point. Prices does not sweep out the low and continues through the high, makes a higher low, continues through the high. So that is bullish continuation. Structure keeps breaking higher and the trend is confirmed. Bearish structure continuation is the exact opposite. The structure keeps breaking lower, confirming the market's intent to keep delivering down. As you can see here, a low, lower high, lower low, lower high, lower low, showing you that the structure is bearish. And you never want to trade against this. If you can see that we're making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, you don't want to get down here and get long. You want to be getting short on the lower high. So you want to anticipate a lower high, get short in the market to put in another lower low, get short in the market at the lower high to put in another lower low until you get a market structure shift. Every break is a shift or a continuation. So every single break in the market tells you something, and this is how you read price action. Every break is going to show you the market structure. Is going to show you that structure is either continuing, as you can see here, or it's going to show you that the structure is either breaking. As you can see here, we have a high, a lower, high, lower, and then what happens? We put in a lower and then we put in a higher. So this is the structure breaking, and this is the direction changing. So key things to remember from this class is market structure shift. Liquidity has to be taken plus displacement away and a close through your previous structure. Wicks do not shift structure. candle closes do. There are no exceptions. It doesn't matter what anybody else tells you, what you think. The candle has to close for it to be true. A bullish market structure shift manipulates old lows and then delivers higher fast. A bearish market structure shift does the exact opposite. Structure continuation is structure breaking within the trend. Structure breaking within the trend, as you can see here. After a structure continuation, hunt entries in the discount or the premium array, which is something we'll cover in another class. But now that you understand that, we're going to get into a few real chart examples so you can see exactly how you can apply this. All right, so let me start over. Alrighty, welcome everybody. Let's get right into the live examples and how you can apply this. So the first thing you're going to want to identify structure is a market structure shift. And what was a market structure shift? Remember, we had to have liquidity that was taken out. As you see, liquidity that was taken out, displacement away. How can you identify displacement? If you watch the other videos, displacement more times than not is going to have a fair value gap with it. So here, there's a gap in between candle 1 and 2, and fair value gaps are going to be covered in the next class. But whenever you have a fair value gap, that shows intent and displacement. So that's displacement there, or you can just find big candles. As you see, this is a pretty big candle. And then if you look here, what do we have here? Our swing low. So what's the last thing I'm looking for to confirm? Is this a market structure shift? Did we get a closure through this swing low? Yes, we got a closure through that swing low, as you can see here. And this is another little gem for you. If you want to trade the market structure shift, now you can anticipate that price is going to put in a lower high. So here we have a high, a low. The market structure has shifted. As you can see here, we're putting in a high, a higher low, a higher high, a higher low, a higher high. Then we put in a lower low. Now I can anticipate a lower high inside of that fair value gap right there. You see that? Inside of that fair value gap. And then what can I expect? A lower low. So what's this? This is the structure continuing. So here, the structure continued. What can I expect here? I can expect a lower high. And then you drag this over here. What do we have here? Another fair value gap. So here we have an expansion to continue structure. This is displacement. How can I tell this is displacement? Because there are 1, 2, 3, 4, 5, 6 bearish candles back to back with no bullish candles in between the run. There are also bearish fair value gaps as well, showing me this is displacement. So now I want to not trade against this, but I want to trade with it. I don't want to FOMO into the short. I want to wait till price starts to pull back so I can get aligned. So here we can expect a lower high. Then what do we have here? Looking to see if the structure is going to continue through this low. Here, what do we get? Another expansion lower. But what do we have here? Price comes and wicks this level without closing through. This is not a sign of reversal, because what? We're looking for a candle body closure through this low here. So as you see here, we wick this level here. Structure has not continued yet until we get a candle body closure through that level, as you can see here. And then what do? We put in a lower low. What's this right here? A lower high. And then we scroll to the left a little bit. And what do we get here? So now the lowest low is here. What do we get? A candle closure through that lowest low. So what's this? The structure continuing here. As you can see, the structure continues here. And then what do we get? A lower high. We failed to make another lower low. We still have another lower high until this lower low is taken out. So here we have where our structure will continue. We put in a lower high here. And then what do we get? We get displacement down, a little bit of choppy displacement. But look at what happens here. We get another lower high, and then we displace through this 5 minute, I'm actually on the 15-minute chart, but through this 15-minute swing low, get a structure continuation. And then what can I expect again? A lower high and then lower low. And as you can see here, This is how to identify market structure. So you don't want to short in the move lower. You want to short in the pullback. Take your profits in the expansion. Short again in the pullback. Take your profits again in the expansion. Short in the pullback. Take your profits again in the expansion, and do that over and over. We'll go over one more example so you can really get a good grasp. And then I advise you all go and back test these things. Don't just watch a YouTube video and think that's gonna change your trading overnight. People post fake things on YouTube all the time. Make sure you're proving this video right. You're back testing these things, because someone will tell you wrong. And it's alrighty. So if you look here, you can see we have a large bearish move. As you can see here, we have a high here. We got a lower low. We got a lower high, lower low. And as you can see here, we're trending downwards here. What am I looking for to confirm that price has switched directions? A market structure shift. What do we need for a market structure shift? Liquidity, which was taken out right here. As you can see, a swing low is where liquidity rests. There is nothing complicated about it. Here's liquidity. Here's our swing high. We rated the swing low. What do we need? A closure through that swing high. We have a closure through that swing high. What's that going to make this? A market structure shift. As you can see here, we got a market structure shift because we got a closure through that swing high. Now, what can I expect? Price action to reverse. So what am I going to be looking for? A higher low. Here we get a little bit of chop, and then what do we finally get? A higher high, higher low, higher high, higher low, higher high. So as you can see here, and all you need to do is just drag this over here. And as you can see here, what am I looking at here? My ideal still does not change until there is a bearish market structure shift. So here in this leg, if I was looking for a bearish market structure shift, it would have to be all the way down here. And you can say, oh, we chopped around, we chopped around, we chopped around. And this is where most traders get fooled, because you see here, we push higher, we put in a low here, then we put in a lower high, and then we put in a lower low. So people thinking, oh, the trend has changed. And then what do? Get in on this pullback, thinking we're going to go shorter, when the market structure shift is here. And if you paid attention in class 1, it goes over the dealing range, and that's exactly what you need to know for the market structure shift. You have to be able to identify the dealing range. So here we get a closure through this swing high, which I drug from all the way over here, showing that the structure is continuing. Then what can I expect? A pullback, higher prices, pullback, higher prices, and you can expect so on and so forth. So if you have any questions on market structure, drop them in the comments. I'll do my best to answer them all, and I will see you guys in the next video. Peace.